Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is March 20th, quickly wrapping up the third month of the year. We're going to take a look at Amcor today. This is out of the consumer discretionary sector. Let's jump right in the video. And if you have not done so, if you could take the time to hit that thumbs up button down below if you find any value in the content, hit the subscribe button, join us on this journey to financial freedom, join the Vested Interest community, and hit that notification bell so you're notified whenever we put out any new content. Doing that really does help a small YouTube channel like me. It doesn't cost you a thing. It really does help us out. And drop a comment down below. Let me know if this one is in your portfolio, if you're watching it, if you're selling it, if you're avoiding it altogether. Let's jump back into the video. This is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I am interested. If it meets the criteria 5 of 8 or 6 of 9, if it's a financial company, it goes on my watch list. I do more of a deep dive into the financials and figure out a price I'm willing to pay for the company. Now, if you want to know more about Amcor, check them out at www.amcor.com. That's www.amcor.com. That is their homepage where I pulled this information from. Amcor, around the globe, we are a global leader in developing and producing responsible packaging for food, beverage, pharmaceutical, medical, home, and personal care and other products, and that's what they focus in, right? They're a packaging company. They have 218 sites, 4,100 employees in 41 countries, 14.7 billion in sales, and they service markets like the beverage industry, food, healthcare, home care, personal care, pet care, specialty cartons, technical applications, so probably providing some of the packaging for stuff that you buy. Now, the reason we're taking a look at them, down 2.45% on the day. We are talking about Amcor PLC, ticker AMCR, again out of the consumer discretionary sector. Close out the day at $9.15 per share. 52-week range as low as $8.45 per share, as high as $11.39. I would say they're trending towards their 52-week low here. Average volume 9 million. Today's was 7.5. Pretty volatile day overall. Their beta is 0.84, so they are typically less volatile than the overall market. But again, a lot of volatility today. PE ratio 20.81, $20.81 per share. That's a little high, in my opinion, for a company like this. Earnings per share, EPS sitting at 44 cents per share. Next earnings date coming up sometime between April 30th and May 5th. Forward dividend yield is 50 cents per share. I believe they're a quarterly payer. We'll see that here in a little bit. High dividend yield on this one, 5.33%, at least where it's starting. But we'll have to see. If you look over here, payout ratio 111.43%. That's not good. So this dividend yield, even though it's high, may be in jeopardy of a cut. 1-year target estimate, at least according to Yahoo Finance, $9.65. And let's jump into dividend yield theory. To do that, if you were to go to Yahoo Finance, over here on the left of where this chart is, you would see statistics. You'd click on statistics. You go down to dividends and splits. You look at their 5-year dividend yield average, which they do not list. So that is not a good sign. It tells me that maybe they have not been paying a dividend for 5 years, so they don't have enough data. And I definitely do not like that their payout ratio is 111.43%. Again, I would put this on the potential cut, dividend cut category. Ex-dividend date is or was February 27th. Looks like they paid out yesterday on March 19th. So technically, if you were to buy them now, you would get the next dividend, though you'd have to wait a while to get it. Now, again, over here, if you went to Yahoo Finance and went over here on the left, I clipped that out so you can't see it, but if you were to go to the financial page, a lot of good information there. You could see their balance sheet, their income statement, their debt to equity ratios. What does their revenue look like? Is it growing over time, which is what you want? Are their margins expanding or contraction? You want expanding margins. Are they paying down debt? A lot of good information there, and you should be looking at that if you are investing in individual companies. And if you're not interested in doing that kind of research, you shouldn't be investing in individual companies. Probably should stick to ETFs like VOO, that's the S&P 500 stock market, or SPY, or VTI, which is the total American stock market, or another ETF similar to one of those. For our purposes, we're going to look at free cash flow. Typically, if you have growing free cash flow, you have growing dividends, and we want growing dividends over time. Also, out of free cash flow, it's the way they pay down debt. It's the way they reinvest back into the company. So a lot of that is what they use free cash flow for. But again, for our purposes, we're looking for growing free cash flow because we want growing dividends. So going back to 2020, looks like $984 million in free cash flow. 2021, a bit of a jump up to $993. 2022, a little bit more of a jump up to $999. Now here's where things start to go sideways. From 2022 to 2023, big drop in free cash flow, a little over $200 million. Though they are repurchasing their own shares, 604, 359, 744. I would not say that the repurchase of shares in 23 accounts for the drop in 2022, because not only did their free cash flow drop, the repurchase of their shares dropped. So big drop from 2022 to 2023 for whatever reason. So I would say decreasing free cash flow at least over the last year. Nice growth for about 3 years. But then here most recently in 2023 decreasing. And that's probably why they are now over 100% for their payout ratio. Now we're going to jump over to stockanalysis.com, another site that I like. You pick any sites that you want. Just make sure you're picking more than one so you can check the information you're getting is accurate and up to date. They have 4 analysts that have taken a look at this. They call it a consensus sell, and I would agree. Anytime I see over 100% dividend yield, that's a good reason to sell, right? Especially if they cut the dividend. And they have a low estimate of $9, which would be a 1.8% decrease from where it currently sits. They have an average estimate of $9.75, which was pretty much in line with what we saw with Yahoo Finance on the previous page, and would be a 6.38% increase from where it currently sits. And if it happened to hit their high of $10.50, that would be a 14.57% increase. All the while, you collect that 5+% dividend yield, so long as they didn't cut it. We're going to get into the statistic here and look at return on equity and return on invested capital. I like 10% or better for these metrics. Return on equity on this one is sitting at 15.9%, beats the 10% I'm looking for there. Return on invested capital sitting at 7.88, is lower than the 10% I like, though I'd have to compare them to other companies in this same category to see if that's out of the norm. So this would not meet it. This is a mixed bag, right? Return on equity definitely meets the 10% I'm looking for. Return on invested capital does not. EPS growth was not listed, so I'd need to do more of a deep dive on this one to see what's going on here. I'm assuming this may be negative, and that may be the reason that they are not listing it. They did list revenue growth at 1.69%. That's pretty slow growth. So overall, I would say the numbers, in my opinion, definitely lean towards the sell on this one. Now we're going to take a look at the dividends real quick. Dividend growth very slow, 2.06%, and I would be surprised if they can continue that dividend growth with 113.64% payout ratio. They are a quarterly payer. They pay in the March, June, September, December timeframe, which most companies do. Going back to 2021, they were paying 11 cents, some fractions of a penny. Looks like they raised it up 2021, November 2021 to 12 cents. Raised it up again November 2022 to 12 cents and some fractions of a penny. And 2023 most recent raise was 12 cents and some fractions of a penny from 0.25 to 0.5 here. So payout ratio really high, return on invested capital lower than the 10% I'm looking for. I would stick with the analysts on this one, even though there's only 4 of them. They're calling it a consensus sell. This is not one I would be looking to get in. If you own this one, let me know what you think in the comment section down below. I'd be interested to hear some holders of this company and what their opinion is, what's going on. But this payout ratio, that's not a good sign, especially for us dividend growth investors. This does not give them any room to grow the dividend. That means they're paying out more than 100% of their free cash flow. It means they are having to do something to do that. Typically, that means going into debt or issuing more shares. And you don't want a company issuing more shares, which doesn't seem to be the case on this one if they're repurchasing shares. So I would lean towards they're probably going into debt to be able to continue to pay this dividend. And that is not something we want to see, especially right now with higher interest rates on those type of loans. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button down below. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week. And we'll see you in the next one. And I haven't mentioned it yet, but I am going on a family vacation with my kids next week. My wife So I probably will not be doing any videos till later in the week. I will do a portfolio update. We'll be back in time for the Sunday portfolio update, but I probably will not put out any stock pick of the day videos just because our trip is pretty full. I'm not going to have a lot of downtime. We've got some events and stuff planned with the kids, and I want to try to focus on spending some time with them. So apologies, I'll miss next week more than likely, but don't forget to tune back in the Sunday after next. I will do a portfolio update and at least cover what I bought for the week, because I still plan on making a purchase next week. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. It's never invest any amount of comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Always see the advice go search for the financial.